Welcome back for my final daily report market analysis video for today, Friday, the 5th of June, with me, Richard Perry, market analyst at Hantec. Well, let's have a look at gold, where this gold chart has become increasingly uncertain, I think, in the last few sessions, really. The moves that we've seen in the past 2 weeks, I sort of think are dominated by these negative candles that you've got that have basically sort of all negated any positive moves that we've seen through gold. And the negative moves come quite sharply. So it just means that trading gold at the moment is very difficult, very choppy, and I think it's turned into a range play. I sort of spoke yesterday about the fact that we've now broken an uptrend. I've removed the uptrend because essentially I think that gold is now trading in a sideways range, 1660 to 1764. And the reason I think it's in a range is because look at these momentum indicators consistently falling away MACD, consistently falling away stochastics now. The bear cross underneath neutral was a little bit of certainly a warning sign for me. Underneath 50 on our RSI, sort of lows yesterday closed at a low that we haven't seen since March. And it really does suggest, I think, that the market is sort of has lost its bull momentum. This 21-day moving average is now sort of rolling over and providing a basis of resistance. There's a pivot at 1722 on the daily chart. That is restrictive now. It basically capped yesterday's high. On the hourly chart, you can see that it's basically a pivot band, let's call it, 1720 up to 1725. Key turning points consistently since the market has rolled over around that 1720 to 1725 area. And I think that the failure yesterday in that band, again, just reiterates the fact that we're slightly corrective still. You've got the MACD lines, the RSI, which failing around the 60 mark consistently, falling over underneath 30 on the sell down. So you've also got the MACD lines bear crossing just a shade above neutral. So the pressure is still arguably to the downside and a mild downside bias. Failure to get back above 1722 maintains that bias. You've got the support 1689 now. That was Wednesday's low that has been maintained, and effectively within that 1689 to 1722 band, you're pretty much mid-range, aren't you? So we're basically playing around in the middle of the range. Now you do have payrolls report today, so you could get a bit of direction off that. But essentially, at the moment, it's pretty neutral, and you're not really getting any traction in either direction at the moment, and that sort of makes it for quite tricky trading near term on gold. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website, sign up for our webinars, and go to our Trader Talks videos to gain some top trading ideas.